Welcome to my channel. My name is Femi Akimale. I'm a chartered accountant. I've worked in an insurance and finance company for more than 25 years. Today, we shall be discussing a very important topic related to how to invest in Nigerian stocks. So the topics we are going to be discussing today is how to research any stock before you invest. Step-by-step guide. How to research any stock that you want to buy before you invest your money in these particular stocks. You need to know the fundamental analysis about that particular company you want to invest so that you don't need to wait for anybody before you take action to invest in any stocks. So we shall be looking at these topics. But I want to tell you, if you are just seeing my channel for the first time, what I just want you to do for me is to subscribe to my channel, turn on the bell notification. At the same time, like this video so that when you like this video, YouTube will be able to automatically, share it to so many people. So quickly, let us go straight to the business, how to do a fundamental analysis for any company you want to invest in. I will be telling you this kind of various ways and documents to check for you to be able to be abreast, that either to be able to decide on your own whether this stock is good to buy or this stock is not good to buy. So we shall be discussing on that particular aspect. In this video, I will break down, how to fundamental analysis on any stocks, step-by-step guide, how to do fundamental analysis about any stock step by step. You will learn how to read financial statement. In this video, you will learn how to read financial statement. At the same time, understand key ratios and spot red flag on any investment. I will be telling you this kind of ratio that you need to watch before you go ahead and invest in any stocks. So the guide is perfect. This video is perfect for new beginner or intermediate investors, so that it will help you to be able to know which particular stock, when you hear any stock, you know what to look for you to be able to decide on your own before you go ahead and invest in that particular stock. Well, we have about 5 steps of the procedures to follow for you to be able to invest in this kind of. The step 1 is understand the business itself. Any company that you want to invest on, understand what type of business they are doing. What type of business they are doing? Ask, what are they selling? You ask, who are their customers? You ask, what are they selling? What are they producing? Who are their customers? Is the industry growing? Is this industry where the companies, maybe is in technology industry or manufacturing industry or communication industry? Is the company, are they growing? Is this industry growing? At the same time, you need to visit their website. When you visit their website, when you look at website, you go and check on that particular their website, you check about us, so that you will now know about them. You need to understand the business of the company that you want to invest on. You need to understand what are they selling, what are their products, what are their products, is products being acceptable to people in that particular space or in that particular countries. And at the same time, you go and check their website. You check their website, you look at the portion of about us, where they will state what they do, who are they, when are they being business, so that you'll be able to read it and know this kind of business that you want to invest on. Number 2 area that you need to look for is to read their financial statements. You will read their financial statement. You focus on 3 core documents in their financial statement. Number 1, you focus on income statement. Are they making profits? Are they making loss? Then you compare their profit margin from one period to the other. If, for example, you are looking at 2024 accounting year, you compare it with their performances in 2023. You look at their income statement. Are they really making money? Are they really making, you check their revenue. Are they growing in terms of revenue? You look at all those areas, then you look at their balance sheet. You look at their assets portion. You look at their liability portion. You look at how quickly, what are the fixed assets do they have? What are the current assets do they have? You understand? You have to check what are the amount that they have in the bank account. You will check all those things. What are the ones they have in the investment? The investment can easily turn to money. You look at their liability in terms of tax, in terms of debt that they've incurred. You check their balances. You look at it, that are they moving forward? Are they growing? Or are they incurring on debts? All those things you can find that on their balance sheet. You check their balance. At the same time, you look at their cash flow statement. Cash flow statement show the way money are being moving for transaction, going in and out of the company. Because if money are not moving and they are just declaring profit, that means they are declaring profit on paper. But you need to know that they have cash. You check their cash transaction for the years. You can compare this transaction between 3 to 5 years. You look at all these categories. Number one, you look at their income statement, you look at their balance sheet, you look at their cash flow. These are very important aspects that you need to look at, from the company. And you compare it from past year to current year. You compare their performances to see if they are really growing. That is the essence of reading the statement. Always look at revenue. You look at net income. You look at their debts. And you look at their cash flow trends. Very important. For the past 3 to 5 years, you look at that. You study their statement. You need to do this. It's very easy to do. Just pick up their. You can get statement of their performances on the website of Nigerian Stock Exchange website. You can get. They are being mandated to upload their statement of account on the website of Nigerian Stock Exchange, as long as they are listed on the Stock of Exchange. So you have access to their product, and you can go to their website. If it's a serious company, they will post. They will publish their statement of account on their website, so that you can go and study it and be able to check all these trends we are looking at. At the same time, step 3, you have to look at the key financial ratios. You need to look at key financial ratios when you are studying their financial statement. You use this ratio to evaluate their financial health. You use this ratio to evaluate their financial health. Number 1, PE ratio. You have to check price earning ratio. What is price earning ratio? This tells you how much people are willing to pay for a particular profit they are generating, or for a particular profit the company is generating. How much is people or public is willing to pay? For example, imagine company make a profit of 1 naira. 1 naira profit for each of its shares. If the share price is 10 naira, that means people are willing to pay. That means investors are paying 10 naira for every of 1 naira profit they are making. Do you understand now? That's what I'm trying to tell you. So a high PE ratio shows that the company is doing well. A lower PE ratio shows that the company is being undervalued or is having issue or challenges. That's just the beauty of it. I hope you understand. So what we are saying, PE ratio is price the people are willing to offer for a particular profit, a particular profit of that particular company. So if peradventure, for example, again, if peradventure the company makes 1 naira profit and the price is 10 naira, what it means that PE ratio is 10. PE ratio is 10. That is, the investors are willing to pay 10 naira for every of 1 naira profit the company generated. That is what it means. So the higher the PE ratio, the better for you, for the company. So if a company is having higher PE ratios, it's a signal that you can buy that kind of company. That is it. Then you move at return on investment. Return on investment simply means this shows how good the company is able to turn the shareholders' funds into profit. For example, if the shareholders give at least, let's say, for example, they give 100 naira, and the management is able to turn that 100 naira to 120 naira at the end of the year, that means return on investment for that particular year is 20%. That means they make the return they make on the amount they gave to them to operate a business, they were able to make 120 naira. So it's as good as 20 naira is additional profit, which is 20% return on investment. Simple. That is what it means. So if any company is returning higher, like 15%, 20% on yearly basis, that means that company is doing well. But if it is low, to the barest minimum, to 0, to 1, that means the companies are not doing well. So return on investment is a way of the investors' money put into the business how the management are turning those money into profit by end of the year. So if it's higher, for example, if they gave them 1 naira and they were able to return 1 naira 50 kobo, that means they have 50% return on investment. So the higher the profit, the return on investment, the higher will be for you to be able to buy into that particular stock. So then we move to another ratio, debt ratio. The essence of debt ratio is to ensure that the company limits their borrowing. If company is being financed by much debts, that means they have debts to pay, and it will not go well with that particular company. For example, this tells you how much debt a company is using compared to its own actual cash or to its own actual money. So the lower the debt, the better the company. So, for example, now, if peradventure, if a company borrow 200 naira and has 100 naira of his own money at the end of the year, that means he's having a debt twice of the amount of what is gotten as cash. If that will be 2.0, so it's very high. That means they are using much debt in terms less than, compared to the actual cash they have in bank, the actual money. That is what we are talking about. So the higher the debt, the risk here for you to be able to invest in that particular company. So if the lower the debt amount that they have in their balance sheet, the lower the debt amount, the better for the company. Because the company that have, if for adventure, the company have only, they were able to do, they finance most of their activities through debt, and they have about the 20% rate. That means based on what they have in their bank statement as cash is lower than the amount they use to finance. That means they borrow from outside. So the higher you borrow to finance your activities, the riskier the company. So you have to check that. So whenever you are checking, you have to check their levels of the debts so that will guide you either this company is liquid or not. That is what we are talking about. Then you have to look at their current ratio. Current ratio simply means that how company is able to pay their short-time bills. Are they able to pay their short-time bills, that is activities of running their businesses? Were they able to pay it at when due? Are they liquid? That is the essence of the current exchange ratio. If a company holds 100 naira in the next 12 months, but has 200 naira in the bank, for example, company is having 100 naira, for 1 year, he has 100 naira. You have 100 naira, for example, company is owing 100 naira, for example, in the next 12 months, but has 200 naira in the bank. That means it's better off because the amount he's owing is lower than the amount that he has in his company's bank account. So in that regards, if it has 50 naira instead of 200 naira, that means it will be having 0.5. It's very risky. 0.5 rate of current asset ratio. Current asset is just a value for you to be able to meet up with your short-term bills. Are you borrowing to do this, or do you have the cash? So at the end of the day, when you look at the financial statement, you consider the amount they have in their bank account, and you consider the amount they have in terms of borrowing. So it must be higher. The amount they have that can easily be turned to cash must be higher than the amount they borrow in financing that particular company. That is current asset ratio, current ratio, for you to be able to determine on which kind of company are they looking, do they have money, are they declaring profit on paper profit? That's what we are trying to guide against. Are they able to meet up with their payment of short-time bills in terms of salaries, in terms of buying stocks, in terms of all those activity, working capital? Will they be able to finance their working capital accurately? This is what we are talking about. If they still go ahead and be borrowing, at the end of the day, they have amount borrowed higher than the amount they have in bank. That means they have negative current assets. That means that company, you have to run away from that kind of company. That is what we are talking about. Then step 4 is you have to study the management. You have to study the management of that particular company. The people that are running, that are behind the company. You need to study them. You need to know, are they people that have experience? Are they people that have experience? Are they experienced people? Have they delivered, consistently in their profit margin? You have to, what is their competitive edge? What is their competitive edge in terms of a company that have unique products or companies that have unique name like Dangote. You know that Dangote is, we know most of their products, they are in monopoly of that product. They are the only one producing fuel in this country. They are the one producing cement. I think they are the larger producer of cement in Nigeria. So they were known because of this particular episode. And it's very difficult for that particular, especially banks, it's very difficult government regulation, for you to be able to move into that particular business. If peradventure, you cannot get into that particular business easily. For example, now you cannot just get license in the bank. So you should know that when those companies that have leader, they are leader in their area of operations or in their sector, they are the leader. When you talk of banks, who are the, you consider Zenith Bank, you consider GT Bank. These are the leader in the banking sector industry. You look at Access Bank, you look at Fidelity Bank. These are banks because nobody can be able to. And then if you look at the banking sector now, they are doing well. That is what we are talking about. So when you look at any company, you look at the industry, how competitive are they in that particular industry, for you to be able to determine or either their company is good for you to buy or not. That is what we are talking about. Then step 5, you look at their growth potential or risk. Do they have growth potential? Do they have anything in mind? You study their, the investor reports. Do they have their products that need to be, maybe they have something in plan that need to be given to people. For example, their future plans in terms of products, in terms of what are the products, do they have any product in the pipeline? You check their investor reports. Then you look at does the company being innovated? Do they innovate? Do they try to spread their tentacles? Are they remaining on a single-ended place, or are they willing to expand? You need to look at that. Is the industry expanding? You need to look at all this area for you to be able to determine if the company that you are investing on is something that you can buy for a short-term purpose or for a long-term purpose. So for example, now people buy into some investment because of dividend. They leave that stock there for future when they want to retire. That is because they believe that the price of that stock cannot go down. That is what we are talking about. So what are the final tips? What are the final tips for you to be able to decide on which stocks to buy? You have to consider, look at this. You have to consider, you can look at Yahoo Finance for you to be able to look at about any company. You can look at every company. You can look at Nigerian Stock of Exchange website to look for any statement of that particular company that you want to invest on. At the same time, you need to read a lot about business, especially in the business day. You can subscribe to business day newspapers for you to be able to have information about that particular company. At the same time, you need to read finance blog. At the same time, YouTube channel that they are talking about investment for you to be able to be abreast of which type of stock that is in vogue that you can invest in. You have to be financially literacy for you to be able to know what to do, and always compare on and year performance. For example, compare past year to the current year in terms of their performances. Look at, are they moving on? Look at their dividend history payment. Are they paying dividend on a regular basis? Are they liquid? All this information is a fundamental analysis you need to do for you to be able to decide or take decision in buying any stock, especially in Nigeria. I hope you enjoyed this video. If you enjoyed this video, what I just want you to do for me is to like this video. When you like this video, YouTube organic will be able to automatically share this video to so many people. At the same time, I want you to subscribe to my channel. When you subscribe to my channel, turn on the bell notification so that whenever I'm giving out a valuable video like this, you will be among the first person to watch. At the same time, please like this video. Have you done that? Have you done? Thank you very much. Thank you very much again for watching this video to the end and for subscribing to my channel. Thank you. God bless you.